If you're running a business and haven't thought seriously about your tax strategies, chances are you're tipping the IRS every single year. Not intentionally, of course, but the effect is the same. You're burning money. Today, we're going to fix that. Meet Sarah. Sarah's a graphic designer making about $300K a year. She's amazing at what she does, but she's also running everything as a sole proprietor and didn't know that there was a better option. This filing season, her tax preparer told her that she owed over $80,000. There's a reason why, and I'll show you how she could have saved more than $30,000 with basic tax planning. The first major decision in tax planning is choosing the right entity. If you're making more than $50K of profit and distributing income, you probably shouldn't be a sole proprietor. Most profitable businesses benefit from being an S corporation. Why? Because it opens the door for compensation planning, and that leads us to our next slide. S corp owners wear two hats, employee and shareholder. You're required to pay yourself a reasonable salary for the work you do, but anything above that can come to you as a distribution, not subject to Social Security or Medicare. This is one of the simplest and most powerful tax strategies for small business owners. If you're running a pass-through business, whether you're a sole proprietor, partnership, or S corp, you may qualify for the qualified business income deduction. It lets you deduct up to 20% of your net business income. But here's the catch. Once your income gets high, you'll need to make sure you've paid enough wages to maximize the deduction. That's why compensation planning is so important. It doesn't just reduce payroll taxes, it can help preserve this valuable deduction. Health insurance is expensive, but if you have employees, you can structure your plan to benefit both them and you. A Section 125 plan lets employees pay premiums pre-tax, which lowers their income and your payroll taxes. For solopreneurs, consider self-employed health deductions. It's all about structuring wisely. In California, if you have employees, you're required to enroll in CalSavers or set up your own retirement plan. But even if you're solo, setting up a retirement account can shield thousands of dollars from taxes. You have options: SEP IRA, solo 401k, even defined benefit plans if your income is high enough. And here's the kicker. While individual IRAs cap out at around $7,000 in annual contributions, many business retirement plans let you contribute $70,000 or more. That's real tax sheltering and real wealth building potential. Here's a California-specific gem, the pass-through entity elective tax. If your S corp or partnership opts in, you pay California tax at the entity level and then claim a credit personally. This lets you bypass the 10K SALT cap on your federal return. It's a mouthful, but it's very powerful. If you're curious whether or not you're losing deductions today, go and take a look at your latest tax return and look at Schedule A. If your state and local taxes exceed $10,000, or if you don't even have a Schedule A, you're leaving money on the table. This election helps you get that back legally. If it's ordinary and necessary for your business, it's probably deductible. That includes advertising, software subscriptions, contractor payments, meals, and mileage. The key, keep good books and records. If you're not tracking it, you're probably losing it. So let's recap. Choose the right structure for your business, set your salary, take your QBI deduction, set up a health plan, don't ignore retirement, and if you're in California, elect the PTE tax, and always track your expenses. Business tax planning isn't one big move, it's a bunch of little levers that together make a big impact. This is just a primer. In future videos, we'll cover more advanced strategies spanning across different activities like business, real estate, wage earning, and wealth preservation, and different categories like structure, accounting methods, deductions, credits, and exits. But you need a solid foundation first, and now you have it. Thanks for watching. To learn more, visit www.tandvllp.com/tax-planning. That's www.tandvllp.com/tax-planning. Thanks, and I'll see you next time.